Good morning, this is Tim McGowan for the Finance News Network. US equities fell on Friday to cap their third straight weekly decline after a solid August jobs report failed to ease fears that the Fed Reserve would keep aggressively hiking interest rates to fight inflation. After rallying through the morning, the Dow Industrial Average was up 370 points at one point, but finished lower by 1.1%. The S&P 500 fell roughly the same and the Nasdaq declined 1.3%. All the major averages were lower to end the week. The Dow fell 3%, the S&P 500 3.3%, the Nasdaq fell 4.2%. Highlights for next week included Jerome Powell's speech, ECB and RBA meetings, OPEC meeting, ICM services and a number of sell-side conferences. Flow data indicated the biggest outflow from US equities in 10 weeks, with the average US stock mutual fund or exchange-traded fund down 17.3% for the year to date through August, according to Lipper data. That includes a 3.5% average decline in August. On the macro front, credit agency Moody's has cut its 12-month price outlook for key mining commodities, blaming the global economic slowdown and softening demand, especially from China and Europe, where a recession is in the offing. Moody's named essential commodities such as gold, silver, steel, aluminium and copper in a major research note on Friday. Stocks initially rallied on August non-farm payrolls report that saw job growth slightly ahead of consensus. The report seemed to have checked the boxes for a market looking for some reprieve amid the renewed upward pressure on rates from the Fed's pivot, pushback and raise and hold messaging. However, the market then went on the defensive after news of an extended Nord Stream pipeline shutdown. The Russian energy major Gazprom extended the shutdown of gas flows through to Germany on Friday evening, providing no time frame for a reopening. The timing of the move will raise questions over whether Putin was responding to an impending imposition of a cap on Russian oil. Looking at the S&P 500 sectors, energy was the strongest despite a weekly fall of 8% for Brent crude last week. It seems the market is attracted to the record earnings announced from the sector recently. Within the sectors, weaker thematics included social media, hydrogen, EV charger, online education and cannabis stocks. On a brighter note, solar energy is growing so quickly that global installations this year are on track to be 3 times greater than the capacity regulators expected to be added in 2040 when it made its projections in 2017. The recently passed Inflation Reduction Act is expected to be a game changer for the solar industry, providing nearly $369 billion to bolster energy development. Analysts have been upgrading the sector post the passing of the legislation. Shares of First Solar, for example, jumped almost 29% in August. On the currency front, one Australian dollar has weakened slightly, buying 67.86 US cents. On the commodity front, iron ore futures are pointing to a 1.4% gain. Gold bounced on Friday as the dollar retreated after US jobs data came mostly in line with expectations. Gold gained 0.8%. Silver was up 1.2% and copper added 0.2%. Oil added 0.3%. On the futures front today, the SPI futures are pointing to a 0.2% fall. This is Tim McGowan for the Finance News. Have a good day.